Everyone is watching gold break $5,000. Everyone is celebrating silver at $81. But nobody is talking about what just happened inside the COMEX vaults. 102.5 million ounces. That's the registered silver inventory as of February 9th, 2026. And if you don't understand why that number should terrify you, you need to stop everything and listen to what I'm about to tell you. Because against 715.9 million ounces of open interest, that registered inventory provides a coverage ratio of just 14.3%. 14.3%. That means for every $100 of silver contracts being traded, there's only $14.30 worth of actual metal in the vault that can be delivered. And February 27th is first notice day. That's 18 days away. 18 days until contract holders can demand physical delivery. And when they do, the COMEX doesn't have the silver to give them. This is the final warning. And if you don't act now, you're going to watch the biggest short squeeze in precious metals history happen without you. You know what CNBC is talking about right now? Stocks, Bitcoin, the Fed. They're showing you price charts and analyst predictions and telling you everything is fine, but they're not showing you the COMEX vault data. They're not talking about registered inventory. They're not explaining what happens when open interest is 7 times larger than available physical metal. Why? Because they want you distracted. They want you looking at paper prices while the whales drain physical metal from the system. They want you to think silver is just another commodity that goes up and down based on supply and demand. But the data shows something completely different. The data shows a system that's on the edge of breaking. And when it breaks, when the COMEX can't deliver physical metal to contract holders, the paper price becomes irrelevant. The only price that matters is what someone will pay you for physical metal in your hand. You're watching this video because you're smarter than the average investor. You know that what the mainstream media doesn't talk about is often more important than what they do talk about. And right now, they're silent on the COMEX. Dead silent. That should tell you everything you need to know. Let me break down exactly what's happening right now inside the COMEX silver market. Because this is not just a statistic. This is a warning signal that the entire paper silver system is about to collapse. Registered inventory, 102.55 million ounces. That's physical silver sitting in COMEX vaults that's available for delivery. Not total silver, not eligible silver, registered, available, ready to be claimed. Open interest, 715.9 million ounce equivalent. That's the total amount of silver represented by futures contracts currently open on the COMEX. Every one of those contracts represents a claim on 5,000 ounces of silver. Now do the math. 102.55 million ounces of registered inventory, 715.9 million ounces of open interest. That's a coverage ratio of 14.3%. What does that mean in plain English? It means the COMEX is running a fractional reserve system, just like the banks. They're holding a fraction of the physical metal while selling paper claims to 7 times that amount. And it works until people start demanding physical delivery. Then the system breaks. Now here's where it gets terrifying. We're seeing aggressive physical delivery demands. Whales are draining the vaults month after month. The registered inventory is dropping while open interest stays high or increases. This is not normal. In a healthy market, registered inventory should be a comfortable multiple of open interest, but we're seeing the opposite. We're seeing inventory drain while claims multiply. And February 27th is first notice day for the March contract. That's when contract holders can stand for delivery. That's when they can say, I don't want your paper, I want my physical silver. What happens if even 20% of open interest stands for delivery? That's 143 million ounces. The COMEX only has 102.55 million registered. They'd be short 40 million ounces. They couldn't deliver. Now connect this to the bigger picture. China has been restricting silver exports. Industrial demand is surging. Solar installations are breaking records. AI data centers need silver. Electric vehicles need silver. The deficit is real. The demand is real. And while all of this is happening, the COMEX registered inventory is sitting at barely enough to cover 14% of open interest. This is a powder keg, and February 27th could be the spark. Let me give you a specific scenario, not a guarantee, not financial advice, but a realistic outcome based on the data we're seeing. If the current trend continues for the next 18 days, here's what could happen. More whales stand for delivery. Registered inventory drops below 100 million ounces, maybe below 90 million. The coverage ratio falls to 12% or lower. On February 27th, first notice day hits. Let's say 25% of open interest stands for delivery. That's roughly 179 million ounces demanded. The COMEX has less than 100 million registered. They have 3 options. 1, they deliver what they have and default on the rest. 2, they cash settle the contracts they can't deliver, forcing contract holders to take dollars instead of silver. 3, they change the rules, force liquidation, emergency measures. Any of those 3 outcomes would shatter confidence in the paper silver market. And when confidence breaks, the rush for physical accelerates. Everyone who was comfortable holding paper contracts suddenly wants metal. And there isn't enough metal to go around. That's when the real squeeze happens. That's when the price of physical silver decouples from the paper price. That's when you see $20, $30, $50 premiums over spot. That's when dealers run out of inventory. That's when delivery times stretch to months. We saw a preview of this in 2020 during COVID. Premiums spiked. Dealers sold out. You couldn't buy physical silver at any price for weeks. But this would be worse, because in 2020, the COMEX didn't have a delivery crisis. They had enough inventory. This time, they don't. I'm not saying this will definitely happen on February 27th, but I am saying the setup is there. The registered inventory is critically low. The open interest is massive. The whales are draining physical, and the clock is ticking. If you wait until after first notice day to see what happens, you'll be too late. The premiums will already be sky high. The dealers will already be sold out. You'll be competing with everyone else who just woke up to the shortage. So here's what you need to do. Right now, not next week, not after you see what happens on February 27th. Right now, go to your trusted dealer, buy physical silver, not paper, not ETFs, not mining stocks, physical metal, coins, bars, whatever you can get your hands on at a reasonable premium. Pay the premium. Lock in your metal. Take delivery. Put it in your safe or your vault or wherever you store your wealth. But get it out of the paper system. Because if I'm right about what's coming, the paper system is about to fail. And when it fails, the only silver that matters is the silver you can touch. I'm not telling you to sell everything and go all in on silver. I'm not telling you this is a guaranteed trade. I'm telling you that the data is screaming warning signals. 102.55 million ounces registered. 715.9 million ounces open interest. 14.3% coverage. February 27th, first notice day. Those are facts. Those are numbers you can verify. And those numbers tell a story of a system under extreme stress. Stack physical silver. Do it now, before the squeeze, before the premiums explode, before the dealers run out. This is your final warning. Don't say nobody told you.